Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Before we get to the FANG stocks themselves, as I promised last week, we will be having a free introductory webinar in January for FANG Friday viewers who want to learn more about the science behind SVA and why our proprietary charts provide such clear buy and sell points for so many stocks. The feedback last week was actually a bit overwhelming. So if you still plan to attend, please sign up right away and right now, as space is limited and we're getting full. You can do so by sending us an email with your first and last name to info@strategicanalysis.ca. In that webinar, I cover the science behind SVA, although not the mathematics themselves, you will be happy to know, and why our proprietary charts provide such clear buy and sell points for so many stocks. I will provide you with a good background so that you will be comfortable in using it yourself to keep close tabs on your own portfolio. And now to business. This morning's abrupt emergence of a new and potentially major threat to the North American economy, the new variant, that is NU variant of the COVID-19 virus, comes at a very intriguing moment from an SVA perspective. Let me explain what I mean. In the past, I have provided you with information on the market itself as far as the S&P 500 is concerned. But what I have not done is to bring you into the fold as far as the NASDAQ is concerned. The NASDAQ 100 may not be, in some ways, as important as the Standard & Poor's, but, and this is a huge but, there is excellent information value in knowing where the NASDAQ 100 stands, and that is particularly true right now. As of the close of trading yesterday, the NASDAQ 100 was trading right at its HB1 price. That's roughly 10 times its adjusted book value. And almost right on schedule, along comes this new major potential for disruption. I mean, the timing is almost beyond incredible. So today, I will have to re-examine the FANGs in an entirely new light and see what actions we could or should be taking. But before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's turn to I guess I might call the three problematic stocks. And the first one is Nvidia. You know, as I pointed out to you last week, Nvidia trading at its HB6, that is actually, it ties a 30-year high for the stock. And, right on schedule, along comes this potential for disruption. And maybe that's all that we're going to see for Nvidia, at least for a while. The same thing I could say about Microsoft. It came right up, or very, very, very close to its HB3 price, which is 16 times book value. And, as I also pointed out last week, the stock ran into problems at its HB2 and its HB1 as it was advancing, and it may well be doing that now as well. And finally, Alphabet, my favorite stock, which I was kind of loath to sell. But what's happened here? Alphabet has been unable to advance beyond its bubble price at 7.4 times book value, and it's been struggling there for the last 3 months. And, and as I've said before, when you have a stock that trades kind of either side of a break point, that's what we call kind of ragged trading. And very often it does lead to a setback. Now, I had thought with the rising fair market value that perhaps it would break out, but I think with today's action with the standard, at least with the NASDAQ, that may not occur. Now, stocks that are kind of safely on side and which we could consider to be COVID-19 kind of new variant stocks, and the first one is Amazon. Now, I had put a buy on Amazon because at its HB2 it was trading at a 10-year low, and you know, I think that was a good entry point. But look at the forecast, okay, for the earnings, and therefore its fair market value. Okay, it's starting to plunge abruptly. I'm going to be watching that HB2 price very, very carefully. The second COVID-19 stock, of course, is Netflix. And Netflix was, I think, the only one of the FANGs today which actually traded up fairly strongly. So again, you know where strong support is at its HB3, but if this new variant is going to prove to be rather more lethal, we might want to be staying with Netflix this time around. Finally, Apple. Well, Apple, as you can see here, I hope that this dotted line had broken out over its HB6. Now, ignore that turn up in the structural price, because that does not take into account any stock buybacks that this company has been indulging in, and they have been suppressing its book value very nicely for some while. So I have taken this breakout to be a good one. However, it now has to hold. Finally, Facebook. Well, the problem with Facebook is twofold, of course. First is what's going to happen to it. Sorry, I shouldn't say Facebook anymore, should I? I should be saying Meta. The problem with Meta is twofold. First, we don't know what the regulatory outcome is going to be. And secondly, when a stock is trading between two breakpoints, okay, given that the market is a random walk, we cannot make any forecast as to the potential future for the immediate future, at any rate, for the price. And therefore, this is a stock which personally, as I've said before, and I will say it again, I would not touch. Now, I started off with Nvidia, and the question is, if you didn't hold Nvidia, what might you be looking at? And you remember a little while ago I showed you actually a number of stocks that were in the semiconductor field, and one of them was Intel, and I'm going to revisit Intel right now because it's very interesting. And here it is. Well, the last time that we looked at Intel, okay, the stock was kind of struggling to hold its mid-growth price. That has let go, and you can see why, and that is because the earnings forecasts have been falling. I mean, the problem with Intel is that it's got this, what it hopes is a marvelous new chip, but it's not going to be able to be released for the next year or two. And therefore, the immediate outlook for the stock has been falling. However, let's not dismiss Intel out of hand, because I want to show you what Intel looks from a very long-term point of view. This is the 35-year look at Intel. And there are two phases of the stock. Okay, the first was the strong growth phase that ended in 2000. Okay? And the second is the rather slower growth phase that has persisted to right to this day. And what's interesting about this chart is not the peaks, but look at the troughs of that stock. It has, with two exceptions, always bottomed at its growth price, and it's there today. Now, if we go back to 2008-9, we do see that there was a final drop there of the stock when it went down to its HC price. But for now, we would have to say that the growth price looks very interesting as far as this stock is concerned. So in summary, this week I have, I hope, shed some light on an interesting aspect of the FANGs, that is to say their relationship with the NASDAQ 100. You can plainly see that Nvidia, Microsoft, and Alphabet were waiting, almost as it were, for the NASDAQ 100 to provide some leadership. A breakout for the index, however, now seems unlikely. And therefore, a setback for the NASDAQ and these three stocks would seem to be in the cards. Now, the two COVID stocks, Amazon and Netflix, are comfortably above strong valuation support, but we will need to keep those levels very much in our minds. Apple is also safely onside for the moment, but perhaps only for the moment. Finally, Meta, or Facebook as the case may be, is not only in regulatory limbo, but also in market limbo. Its immediate future depends on both the NASDAQ and the degree to which its name change can paper over its egregious behavior. What you choose to do is between you and your own conscience, but personally, I intend to see what happens from the sidelines unless I get a clear SVA signal to the contrary. The bottom line is that at present, as far as our Phantom FANG portfolio is concerned, I would personally only be really comfortable holding Amazon, Netflix, and Apple. As a last thought, these may be more exciting times than I, for one, was expecting in the immediate future. But what you should do with the rest of your portfolio may be more obvious with SVA at your back. You know where to find me. And if you'd like to know more about how we can help with your decision making, you can still tune in to that free webinar in January, or go to info@strategicanalysis.ca right now. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.